Hello and welcome to KYC. I am Sharath Dubey and you are watching NDTV Profit. Let's start the show. But before that, I'll give you some hints about this mid-cap company, and it's a very interesting company I've taken. But let's give you the hints first and then you decide which this company is all about. It's a very big hint I'm giving you. It's a part of Gallantt Group. It's in the steel sector, the listed arm I'm talking about. The second hint would be the promoter buying has been seen lately. There are some interstate transfers also, but nevertheless, a lot of action coming from the promoter segment, and that's one of the key reasons why I picked up this company. And the brand is endorsed by Ajay Devgan. That means there is something related to strength, something related to steel. Also, the stock has been a multi-bagger. Over the last 5 years, look at the gains which has come in, 1100%. That's an important number to look at. But these are the key hints to talk about. But another hint I'll give you, Gallant means bold, valiant, and we're talking about steel also. So the company in focus is Gallantt Ispat. That's what we are talking about here today. And why are we calling this company? The earnings season is over. What actually happened there? Lots of reasons are there, but of course a promoter action is something which actually intrigued my interest in this counter. Technically also, the good up moves can be expected. That's what analysts have told me, and that is why I've got this company in my show. Now let's look at this. The promoter buying has been seen lately in this counter. Also some interstate transfers are there. Another reason why we are calling this company in KYC is that the key demand and the pricing trends for the steel industry, that is also very much important. A lot of steel related stocks are buzzing as well. The Q4 outlook on volumes, will that be better than Q3 going ahead? That's a key question to be asked. And also, another important reason why we are calling this company is overall, you could see the industry specific moves and the capex and expansion plans. What are the mining plans looking like? UP and Rajasthan, these are the areas our target would be in this questioning, and the margin outlook and the integration benefits, because companies also going into the value added product segment as well. So these are the key queries we'll have for Gallantt Ispat, and of course the most important thing, the value added products. Mayank Agarwal, he's the CEO of Gallantt Group and also of the company, will be with us, and Mayank will be answering a lot of these questions. And is there any future value unlocking happening here from this group? That's also a very big question to be asked. So for Gallantt Ispat, let's talk about the company. What does the company actually do? TMT Saria, we all know about it. Lots of ads come. So they have that business. Apart from that, they are the largest producer of rebars in the state of Uttar Pradesh. They are a regional player, but they are expanding. 25% market share they have in their key addressable geographies. Largely, it's in the top 10, you could say that, in certain categories. And the manufacturing units are set up in two places. One is in Kutch in Gujarat and other Gorakhpur in Uttar Pradesh. Apart from that, also, it's a preferred bidder for an iron ore mines in Uttar Pradesh. So we will be asking Mayank the important timelines for this segment as well. Moving on, it's a 2x growth the company has seen in its gross block. I checked the financials, and that's a very important statement coming in the last 4 years. So there is a massive expansion at play, and incremental numbers can start flowing in. The top line impacted due to softer realizations. These are just the Q3 numbers, just to give you a perspective about how the earnings went, but it was still mixed. But the margins, there was a good surprise coming in because the rebar sales, that had shown a good momentum. Likely that the Q4 also will show a good momentum as well. There are key capacities to talk about. 1 million tons per annum finished steel products is there, and roughly 300 crore rupees of land bank is still there. That means expansion, other group of expansion can also come, and this also helps in the balance sheet as well when you judge a company. Apart from that, the operational sales volume, we have taken the 9 month to give you a bit, bigger volume picture. The TMT bars, that has been flat, so that's a bit of concern. Billets 15% up, a low base for sponge iron, that's around 423% up year-on-year basis. But pellet, there has been a degrowth of 24% in the operational sales volume. Apart from that, let's look at the capex outlook, and that is something very much important because the market cap is roughly 14,000 crore rupees, but the deployment, this is a big amount, 3,000 odd crore rupees. So how will that breakup happen? That's much important. We could just show the breakup. That will be also interesting for this entire capex, this allocation would be towards the backward integration of the key raw materials, and this is very much important if you need to go up the value chain. Apart from this, there are other investments also which are given towards the capacity expansion over the next 2 to 3 years. So the entire breakup we will be asking Mayank. So we spoke about the company, we spoke about why we are getting this company in KYC, but apart from this, I want to show you what are the ratings we give a company, be it a small cap, mid cap, large cap. For everyone, the rules remain the same in KYC. Income statement, balance sheet, cash flow, these are the numbers which we judge the company by. Apart from that, the return ratios are also very much important. The ROCE numbers, the ROE numbers. And we talk about the shareholding, we talk about how the promoter shareholding is changing, institutional participation, is it there or not, and even street cred. And if you have invested money in the stock, have you made in the long term, medium term, or short term? We divide that and explain you that. And last but the not least is the outlook. Industry specific, company specific, we add both of them up and then we judge the company. So let's start with the first parameter. That is, of course, the income statement. And largely the top line numbers, generally you do not judge a steel related company with. So it's just a meager 12% CAGR growth. What you need to check is the EBITDA number. This is one of the most important things in this industry. The EBITDA per tonnage, that has done really well, 33% 3-year CAGR coming in, and even the PAT numbers, that's also good. Over the last 3 years, it's 32% CAGR coming in. I spoke about the mixed Q3 numbers, but if you could just show the Q3 numbers as well, that's where a short-term concern is there, because the realizations were on the lower side. So to balance out our analysis, we have given this a neutral rating when it comes to the income statement. Let's talk about the balance sheet. What has happened? Company is doing expansions. Of course, some concerns might be there on the return ratios, but company has actually managed it very well. Overall, the borrowings, it's still very decent. It's actually come down from 462 crores to 378 crore rupees. That means they are using their internal cash flows also for expansion, and that's a very healthy sign when you judge a company on their balance sheet. I would like to talk about the cash balances. That's also decent at 258 crore rupees. So a lot of capex within the next 2 to 3 years might be coming in from there. So the way the balance sheet has been managed for the size of this company is really good. So I have given a strong thumbs up when it comes to the balance sheet as well. So we spoke about the numbers. The first one being the income statement, the second being the balance sheet, but cash flows, they are very much important, especially in a long gestation industry, which is prone to fluctuations in realizations and pricing. That's the simplified way of explaining the cash flow setup. The cash flow from operations has been doing well, a good lumpiness coming in FY24. Of course, the base was low here, but then you see it has maintained and it's growing very fast, and that is where the interest is lying in the market. Cash flow from operations is the most important thing. The cash flow to conversion also has been maintained. It's above that 100% mark, and that's a really good sign going ahead. So for Gallantt Ispat, when it comes to the cash flow management, is also strong. So it's a thumbs up when it comes to the cash flow segment. Let's look at the return ratios, how things have panned out, and a lot of these structures change has happened, but the company is doing well in both the liquidity parameter and the balance sheet parameter, and it has been increasing. It was 13% in FY21. It's a gradual increase coming in from 13 to it went to FY24 16, and now there's a good jump of 23% coming in the return ratios. It's likely that the 9-month numbers will be above this 20% mark, and a 15% to 18% is something which you should expect from a business model like this. But net, it's exceeding that. So for the return ratios also, I'll give a strong thumbs up when it comes to Gallantt Ispat. Let's talk about the shareholders, and one of the key reasons was the company's name was popping a lot in the promoter buying segment as well, and the interstate transfers are also happening. So minor increase is coming in the promoters. The changes which you are looking at, it will be updated in the March quarter, because there was a buying in the month of January and also in February as well, but no retail, no institutional participation. That's a big question mark also. But a company is this size, at this level, it starts actually getting the interest. But a minor increase is there, but the numbers are below the 1% mark, so it's not coming on the screen since we have rounded it off. FI is a slight buying is there. These are like the tracking quantities which have started coming in. That means later on, if any blocks happen via promoters or even from open market, we might see big moves coming in. So net, the shareholding is strong. as per our analysis. So I'll give a thumbs up when it comes to Gallantt Ispat. Let's talk about the other ratios also, and this is the street cred. How much money, ये पैसा कितना बना है ये stock. The price I'm talking about, 6 months, concerns whether it's down 11%. Year to date, decent, 6%. It's been like neutral analysis till now. But in last 1 year, what has happened, that is something which is good to look at. 85% up in the last 1 year. So if you're holding as a long-term investor, the stock has given you a good return, and a big multi-bagger in the last 5 years, 1100% of up moves coming in. So congratulations to the long-term investors, but medium-term, short-term investors, it's still mixed. And to even it out and be very balanced in our approach, I have given this a neutral rating when it comes to the street cred. Let's talk about valuations and largely how the valuations are there. And we have taken the size, company size of Shyam Metallics or Sunflag Iron. This is TMT bars which are there, and largely these products are there. And remember, most of the industry valuations, if we talk about it, they have corrected from their peaks by roughly 20 to 35% for all of them. Gallantt Ispat is at 34 times, Shyam Metallics at 32 times, Sunflag Iron, that's at 27 times. But net for the entire sector, these things move together. But of course, there's a geographical concentration which Gallantt Ispat has, especially in the northern India, a little bit in the western India. So net, it's still a neutral rating when it comes to the valuations we have spoken about. But outlook is very much important. And companies, con call also, we had listened, the Q4 expected numbers are expected to be good on a strong volume growth. That's something we'll ask the management. Also, is the strengthening of the steel prices, which we had already mentioned. A lot of channel checks are also suggesting that that also aids well for the company, and the integration benefits, they're expected to be margin accretive. So the margin outlook and guidance becomes very much important for the company, and value-added product mix. That's the second lever which pushes the margins when you get them theoretically, when you study any parameter or a sector. And they are planning to achieve an EBITDA improvement of 2,000 rupees per ton. This is one of the most important parameters to track in this type of sector, and a capex program of 3,000 crore rupees has been announced. Yes, so net the outlook is very strong for Gallantt Ispat, and that is where the technical up moves have started coming in. Smart money is trying to enter the stock, and that's what can be seen in the charts. But what are the KYC ratings for this company? Let's get this up. Income statements largely neutral. Q3 the numbers were mixed, but apart from that, all these key parameters are very strong. Balance sheet, cash flow, and even return ratios, that's showing a good strength. Shareholding, the promoter nibbling has started, a lot of action there, and a little bit of smart money is also entering, just the tracking quantities. But the street cred and valuations, remember, overall the returns long term has been good, but medium term basis it hasn't been that much. Valuations comfortable for the entire sector after that correction, so we need to given more time, but because of that we have given a neutral rating, but outlook is very strong. So let's combine all of our analysis and give you the final rating for Gallantt Ispat. It's on the higher side of the average ratings which we give in KYC. They have got 6.5 out of 8, and Mayank Agarwal, the CEO at Gallantt Group, will be joining us in short while. But an interesting fact about him is associated with this group for the next, or we could say for the last 20 years, and it has a huge, you could say, a good exposure coming in. Mayank, good afternoon to you. Always a pleasure speaking to you. The first question is, of course, on the earnings part. Q3 earnings, there were realizations, but let's talk about the forward-looking, the Q4 numbers. That's where a bullish commentary is coming in. Why is that coming in for your company?
Very good afternoon to you also and to all your viewers, and thanks a lot for having me here. Talking about Q3 in terms of performance, you have very well laid out the entire structure of the company. So thanks a lot to your amazing analysis there. Talking on Q4, the Q4 seems to be very strong for steel sector. We have seen a lot of uptick in the realization part, and also there is a huge demand support as well. And till now, the Q4 performance is extraordinary in terms of last year, same period. And we feel that we are all set to beat our projections of revenue and EBITDA both. and there would be a substantial increase we see in EBITDA in per ton terms also, and overall in terms of amount as well.
Mayank, so these projections are for FY26, right? Where the revenue and EBITDA will beat the guidance?
Yes, so we due to uptake in terms of realizations for Q4, we expect, and also driven by volume growth of about 4-5%, we accept a good jump in revenue as well as EBITDA. So last year our EBITDA was about 16%, and we expect that we would be very substantially beating those numbers.
All right, so that's a very important commentary coming in. But let's go deeper into this segment. Margins, the guidance which you are expected to give, or if you could just give us a range. There are two levers working out. One is the backward integration, and the second is the value-added products, is something which the company is going into. So your views on that, and any other positive levers are there for the margins to go up? And if yes, what's the range we can expect, Mayank?
5 by 1 lakh tons of installed capacity has now reached, as you mentioned, about 1 million tons. We are being governed by three dynamics in terms of our moat advantage. One is where we are adding capacities. The second is where we are further optimizing our operational efficiencies. In the last couple of years, as you mentioned, the growth, it is broadly due to both these factors. And going forward, as you mentioned, we have acquired the mines through government e-auction, where one mines we have acquired in Rajasthan, which would suffice our complete requirement for our Gujarat unit. And we have acquired two mines, iron ore mines in UP, which will suffice our complete requirement, including expansions in Gorakhpur unit, for at least 2 decades in both the places. So while in the next, if we talk about the outlook, while in the next 2 to 3 years, we would be governed broadly by capacity additions. Also, currently we are adding about 25% capacity and making our installed capacity from 1 million to 1.23 million tons. And this capacity addition would be completed in current year Q2 itself. Major part of it is already Q2 next year, sorry, 26-27. And from Q3 onwards in the next financial year, we would see the results coming in for the additional capacity. And besides additional capacity, whatever gaps were there in terms of semi-finished products or power are all being filled up, and they are almost completed. So those will guide our EBITDA margins. As you can see also, if we see the last year 9 months figure, our EBITDA per ton was about 8,000 rupees. Whereas in the current year for 9 months, it is about 8,800 rupees. And this is despite the realizations falling down. So in terms of operational efficiency, I feel that we are very well placed. In terms of capacity additions, it will yield to a jump on revenue while sustaining our EBITDA margins. And once the mines become operational in the next 2 to 3 years, it will add a very huge advantage to the company, where the sourcing will be very smooth and easy. And that would also add to operational efficiencies in future. And besides reducing a direct cost of about 2,000 rupees a ton, as you mentioned.
Right.
We are
Right, Mayank, what will be the timelines for this? Because expansions are taking place for both UP and Rajasthan. If you would just give us that and the effect on the unit economics.
So the total capex plans for the next 3 years is approximately 3,000 crores, as you mentioned. Out of this, about 1,000 to 1,200 crores is going into the capacity additions, out of which 60 to 70% of the capex has already been done. And these capacity additions will broadly 80% of them would be completed by Q2 FY 27-28. And from Q3, we would see the results of these capex being completed, and the rest would follow in 1 or 2 quarters. So that will drive our capacity addition in terms of revenue, etc. And the balance capex, we are doing about 300 crores in solar, where we are putting 18, we are replacing our fired capacity of 18 megawatts in Gujarat with solar and 60 megawatts in for Gorakhpur unit. The 18 megawatt Gujarat installation is already in progress, and that would commission in the Q2 27-28 as well. And for Gujarat, in the next financial year, by Q4, we will complete the 60 megawatt installation also. So while out of these 3,000 crores, 1,200 plus 300, about 1,500 crores of capex would be completed in the next financial year, 27-28, adding capacity, then adding solar to our kitty. And the rest of the 1,500 crores is expected, which is basically into mining, beneficiation, and pelletization. So in phased manner, that would complete in about 3 years from now.
Right.
So
Right. Mayank, just to get this clarification, I was just checking the numbers regarding your debt. Actually, it's technically not there. And it's very much interesting. A company like yours, in an industry like yours, the debt is not there. Everything is happening via the gross blocks are improving and the internal accruals are coming in. For the future expansion, are you looking at any kind of a fundraise now, or everything is going to be internal accruals only, the way you have managed the balance sheet?
So, with the projections that we have, we will be able to mostly fund our current capex plans of 3,000 crores. And besides this, there are certain other projects that we are working at in terms of additional greenfield projects, which I cannot disclose a lot of details because we are still under discussion and nothing is materialized. But let's see how the thing goes. Currently, the balance sheets are very strong, and the current capex plan can hopefully be met through internal accruals. If there's any shortfall, we'll definitely go for a small term loan, but that would not be a very substantial amount. And our commitment to keeping the balance sheets healthy would remain intact, and company is committed to grow at a very fast pace from now on, looking at the cash accrual that we have.
Yes, that's a very prudent way of managing the balance sheet. But Mayank, a lot of queries have come in from investors also in this company, and one query is there is the Gallantt Cement. Is this in the listed entity as well?
So Gallantt Cement is not in the listed entity. It's a separate entity with the separate promoters, and it has nothing to do with this listed entity, except that the listed entity is able to dispose of its waste in terms of fly ash, slag, etc., to its sister concern, which adds some bit of value to this listed company also, while most of it goes to the unlisted one.
And Mayank, Gallantt is a group itself. Are we looking at any arms getting listed or any special situation plays there, or is this going to be Gallantt Ispat right now?
So it is, I think it is too early to comment on that. But yes, currently Gallant is foraying into multiple venues, and those companies are also getting very well established in terms of profits, in terms of revenues, and probably when the time is right, we'll think about it.
An industry-specific question, Mayank. The steel prices, how the current pricing and the client confidence looking like, as an industry spokesperson, your view on that?
So in the short term, as I already mentioned, we have seen a very, very strong demand. And the price realizations have also substantially improved. And if we talk about in the overall perspective of the way the economy is growing, so it is projected that the Indian steel consumptions would rise in the tune of 8 to 9% even in the next FY, as a lot of infrastructural spending is happening, as we all know, in by the central government as well as different state governments, especially UP and Gujarat, where we are broadly based at. And even currently in the budget, we saw a lot additional budgets being given to the infrastructural spending. So in the long run, I think that we are in a steel sector is going to be in a nice position. Yeah, a little bit of up and downs are all cyclical, as we saw in the current year that the growth was very much muted in Q2 and Q3, leading to pressures on realizations, which suddenly went uptick in Q4. So there would be ups and downs, but overall, the demand scenario due to infrastructure spending remains strong, especially in those two states where we are broadly operating. And I see a very good way forward for this company. and steel sector in general.
Right. Thanks a lot, Mayank, for giving a lot of views on the company and the industry as well. Best of luck for the future. It's always a pleasure to host you in NDTV Profit. Thank you.
Thank you.
So this is the management of Gallantt Ispat, and they have stated a very important commentary that the FY26 numbers are going to be beating the guidance for both revenue and EBITDA, and bullishness tone is there for the Indian steel industry as well. That's all, folks, for today. For KYC, stay tuned to NDTV Profit.